Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. I love Mondays. Why? Because the market's back open. What's going on today? Well, we're kind of flat today. Down about 50 on the Dow, maybe 30 on the NASDAQ. Not doing much. Why are we not doing much? Well, we're waiting to see what the Fed says. The Fed's going to talk on Wednesday. Now, they're going to raise the interest rates. They're going to raise it 75 basis points. Some people think they're going to raise it a whole 100 basis points. If they raise it 100 basis points, market's not going to be happy and market's going to come in. All right, so what do we got going on in the market right now? Well, we have this downward trend, right? It's trending downward. The market is trending downward. And this trend is the direction, the big direction of the market, right? But you can have these minor trends, which would be counter trends, which would be these short covering rallies, which would be bear market rallies. I do think we are in a bear market and we're heading lower. I do think we're going down to touch the 200-week moving average on the SPY. Now that's down about 350, right? Okay, we're sitting at 385 on the SPY. I think we're going to get down to that 350 and test that 200-week moving average. That would take out the June lows. But yet these counter trends, they can be very powerful. Look at in July, we had that trend. We were sitting at 370, went all the way up to 430. That's a 60-point counter trend. It's still a downward motion in the big picture. You see, you have to get above the 200-day moving average in order to change this downward momentum. And I don't think we're going to do that before we get to the 200-week moving average down about 350 on the SPY. Now, how we get there, a lot of people will argue about that. A lot of people get upset if I say, hey, we're going to get an uptrend here. Hey, we're going to get a downtrend. Look at the big trend is down, but you can have a lot of swings in between. And it's very possible that we're going to swing back up to the 50-day moving average here. Now, yes, we can go straight down, and one day we could get there. That would be called a crash. We do have market crashes, but typically things go in kind of a motion, up and down, up and down. But the trend is downward. But I do think that there's a good chance that we run back up to the 50-day moving average before we come down, take out the June lows, hit the 200-week moving average, and bounce off of that higher. All right, so let's move on to what's going on in the real estate market now. The real estate market always cracks me up because people get passionate about real estate. A lot of people don't think houses are going down. A lot of people don't think that they can drop 30, 40, 50%. Now, look at this is not a problem that's unique to the U.S., right? This is a worldwide problem. Now, worldwide, real estate makes up about 60% of the wealth. 60% of the wealth in the world is made up by real estate. Now, of the GDP, about 30% is made up with real estate. Okay, real estate is a very big, it's a very big percentage of the world's wealth. And now when the real estate market does come down 50%, that wipes out the wealth. It's transferred. It's a wealth transfer. Look at your house is still going to be there. The office building's still going to be there. The shopping center's still going to be there, but it's going to have a different number as to where the value is. Maybe your house is $2 million now, and maybe it'll hit bottom around $600,000. It's possible. I know not in your area, but in a lot of areas this is possible. So this problem we have in real estate, it started over in China with the Evergrande problem. Now the Evergrande was huge developer, and they ran into some problems. They ran out of money. They couldn't finish the projects they were building, and they got in trouble. And without government bailouts, Evergrande goes away. But Evergrande, they're chugging along, but they're basically bankrupt. And this is where the problem started. Now, the problem went around the world. All right, so it went to Australia, right? Australia had this huge housing boom. But what's happening right now in Australia? They're coming down. They're coming down pretty quickly. Now, our neighbor, Canada's fascinating to me, right? Okay, so Canada, they were sitting there with an average price of about $816,000. You know the average price now? About $673,000. From $816,000 616,000 down to 637,000. Now that's almost 25% off. Now don't worry, it could never hit the United States, could it? Well, yes, it can. Yes, it can. And it is. It is. Now, I live in Silicon Valley, where all the tech companies are, and tech companies are in a lot of trouble. And what's happened to our housing market here? It's come down. It's come down only about 10% so far, but that's the price. It's come down about 10%, but the volume is off 30 to 40% from this time last year. Now, you telling me that the volume's going to stay off 40% and we're only going to stay down 10%? No, it takes time for the sellers to get it in their mind that they can't get the price that Billy Bob got when he sold his house down the street. And they want to get that price, because their house is better than Billy Bob's house. So they're not going to take a penny less than Billy Bob's house. There's no capitulation in the market yet. Yeah, we're still in the first or second inning of this downturn. I mean, it's just getting started. Look at 2023 is going to be a rough year for a lot of reasons. All right, now I say we're already in a recession, but I think they'll call it a deep recession because they can't say depression, but we're headed for some very dark times. Now, that's just in the year 2023. I don't think we're going to bottom out till 2024, but 2023, we're going to be in this deep recession, right? Now, what happens in a deep recession? A lot of layoffs happen. I'm talking millions of them, not 1 million, not 2, not 3, probably closer to 4 or 5 million people are going to lose their jobs. And what happens when they lose their jobs? Well, they can't make their mortgage payment. Well, what would they have to do? Well, they could give the house back to the bank, or they could sell it because maybe they still got some of that equity left. But that equity is getting wiped out. It's shocking to me that most loans that are going out right now, they're only putting 5% down on these loans. 5% down in my area, we're already down 10%. That means people that have bought in the last year are already underwater. They're already getting sad. They're already wondering what to do. Now look, my opinion is that the market broke back in 2008. 2008, the market broke. It just did. That's where we had that great financial crisis. That's where we had the subprime crisis. Since 2008, everything has been artificial. There's nothing real about this real estate market. It really is just propped up by the Federal Reserve. Now, the Federal Reserve, what they do those last 13, 14 years? Well, they held interest rates at zero. But that's not the only thing they did. They bought $3 trillion worth of mortgage-backed securities, meaning they artificially held the mortgage rates low. They artificially held them low. Well, what's happening right now? Well, they're starting to raise interest rates now. Next week, we're going to be at 3%. 3%, okay. And where are mortgages? Well, they're at 6%, and they're headed towards 7%. I'm sure we'll hit 7% by the end of the year. Now, a lot of people can't afford 7%. They can't afford to buy a property. Now, back in 2008, we still had this thing called, it was a middle class. A middle class still existed back then, but we did all this money printing. We printed 3.6 trillion in 2009 to get the houses going back up. We printed 6 trillion in the last 2 years. Now, what did this do? Well, this money ended up in some people's hands, usually the rich people's hands. Now, who's responsible for the money? Well, it's pretty much the middle class. The middle class is a lot weaker now than they were in 2008. The middle class they can't afford to have this burden placed upon them of all these trillions of dollars that we printed. We printed this money, right? And so what's going to happen? Well, we're going to get this middle class is going to go away. We're going to get very rich and very poor. But don't worry, there's a reset coming. And a lot of people think that it's bad that I'm saying the houses are going to go down 50%. They could go down a lot more. 50% might be conservative, but it's not a bad thing. Now, it's bad if you just buy your house this year. Yeah, it's going to hurt. There's going to be a lot of pain coming. A lot of pain coming for a lot of people that bought in the last year or two. But yes, houses need to reset. Look, the baby boomers, we're getting older, and we own the properties, right? Now, the millennials, they're coming up. They want to buy the properties. They can't afford $2, $3, $4 million houses. They don't make enough. They have student loan debt. They have rent is incredibly high. In my area, one bedroom goes about $2,200 to $2,400 for a one bedroom. That's a lot of rent to pay, and so they can't save money. Look at when I was buying houses back in the day when I was a young little whippersnapper, we put 20% down. That's what was required. But 20% down, you could go get a loan if you had 20% to put down. And the houses, they were cheap back then. Oh, they were cheap back then. What's selling for $2 million now? Selling for $100,000 back then, right? So 20% down, no problem. You go get a job, you mow lawns, you wash cars, you do something, you side hustle. Now there's a lot of side hustles out there right now. You could be like doing Uber, you could be delivering food, you could be doing a lot of things in a side hustle, but it doesn't get you to save up 20%, which would be $400,000 on a $2 million house. It doesn't work anymore. The numbers don't work. So we need this reset. This reset's a good thing. A lot of people think it's bad, and it's going to be painful for a lot of people. They're going to lose a lot of equity. A lot of people are already underwater, and they're going to get the houses back to the banks, and the banks are going to have to sell them and take the losses. Look at the 5% down mortgages. You know who guarantees those, right? Well, that's Fannie Mae and Freddie Mac. Now, they're not owned by the government, but they're sponsored by the government, which means us taxpayers are on the hook for all these defaulting mortgages again. Isn't that good news? That's good news today. We get to pay for it. And it's going to get ugly. It's not going to be pretty. Don't worry. I'm sure your area is going to be fine because it's going to keep going up. But no, this is around the world. This is not unique to the United States. The inflation problem is worldwide. The housing bubble is worldwide. And it's already popping in China, popping in Canada, popping in Australia, popping in Silicon Valley. Soon it's going to be popping in your area. Take my word for that. Don't believe me. A lot of people don't believe. Oh, they get upset when I say this stuff. And oh my goodness, it's funny. It's funny. I get a chuckle out of this. It's like if I say the stock market's going up, somebody's going to be upset. If I say the stock market's going down, somebody's going to be upset. I used to say that Bitcoin was going to go down. Oh my goodness, those were religious zealots, man. Bitcoin was their god. Look, right now, a lot of people think the Federal Reserve, the chairman, that Jerome Powell, is going to come out and save us. He's like this godlike figure. I don't think so. I think he's more like the devil to me. I mean, he is not going to save us. I'm telling you, he's the problem. He's the reason we're in this problem. He printed the money. He printed the money that he shouldn't have printed. He held interest rates artificially low for 14 years. He gave all the money to the corporations so they could buy houses and run these prices up. It's all artificial, and it's going to come tumbling down. It's going to come tumbling down. We're in the first or second inning right now. Sit back, get a Coke, get some popcorn, enjoy it. It's going to be a fun show. Yes, it's going to be painful, but it's going to be necessary. We're going to get the reset. Life's going to go on. Your house is just going to have a different number attached to it. Now, you see, that's the thing. So many people, their whole net worth is in their house. That's their whole net worth. And when their net worth goes down, they get this depressed feeling is what they get. And they hate to have their net worth go down. But it really hasn't changed. You still have your house, right? It's still the same house. Look, it's just going to be reset. And the reset is coming. It takes time to play out. We're in the first or second innings all. 2023, it's going to be really ugly. It's going to get a little scary. 2024, there's going to be some sunshine coming. Some great opportunities are coming. You millennials that are looking to buy properties, you hold out to 2024. Oh my goodness, you're going to be so glad you did. I got a little long-winded today. Oh my goodness, I can't believe it's already overtime. I got to go. I'm Tall Mike. Everybody give me a thumbs up. Why not? Get out there. Have a happy Monday, everybody. Bye-bye now.